Hang Seng, it's up around 0.5%. We have Taiwanese index, which is up around 0.3%.
Well, it looks like there is a confirmation of the block happening in the morning. And the good part is it's happening in the block windows.
We have the Nifty that's opened as flat as can be. The Nifty Bank, though, that's up by close to around 80 points.
Foreign money and domestic recovery will carry on underpinning the stock market right through 2023.
You know, this is a kind of a bit of a mixed bag. You're right, it was sort of expected.
Markets opened up at higher levels, record levels. From there, we've slipped a bit as we speak.
If you look at the history of Sensex, right, when they've acquired the roadside, it started off mostly with the ampule business.
This is a OFS completely, and primarily because the private equity investors in the company are exiting.
Promoter of the company, Analyst Singh, is looking at monetizing his stake in the company.
What we have suggested is that there should be a floor of $4 per MMBTU.
Nifty is up 52 points. It has surged a little bit from the lows.
Well, that was the day so far. You're with us here on Closing Bell. With me, my colleagues Nigel and Rima. Guys, hi, good afternoon. Yesterday's high and today's high has been the same so far. As we start the 2:30 this edition of Closing Bell, you've got a surge which is appearing, which is right now taken out the high so far for today and yesterday. I mean, that number was 18,679 and we're at about 18,684. For the first time, that high has been taken out and there is a surge which is coming through. As we begin this surge, I was just looking, started at about 224 or so. So this is 4 minutes. So let's see if we can build on this. But it's very evident that it is coming through. Let's put up Reliance because, I mean, if there is one, the gains are equally distributed. I was looking at the contribution, etc. It's not polarized with the single stock. Reliance perhaps is the biggest contributor with some 12, 13 index points coming in from that name, but it's spread out between HDFCs and ICICI banks and, a couple of tech names even. So that's the overall picture. Bank Nifty, like yesterday, is underperforming. Let's have that up. I think the last I checked, it was in the red, and I think that is also starting to come up a little bit, almost flitting between green and red. Most sectors are doing well. There are only two, as I said, banks, and the other is pharma, which actually is down. Mid-caps are doing better. I mean, the mid-cap index, that is. This is after, of course, the 0.75% pullback that we saw yesterday. There is almost a full recovery of that in trade right now. And, when you talk about broader markets, you've got so many of these, lost and forgotten names which are starting to fire. Not lost and sort of found in this specific terminology or meaning of it. But the fact is, underperformers, laggards, and that has been a theme which we've been highlighting the last couple of days as well. And of course, from the global arena, there is an important event. We've got the Fed chair who will speak, and markets will pay attention. Will he cause a shakeout? That is something which remains to be seen. It's happened before. I'm not saying it will happen again, but nevertheless, one way or the other, it will be important. Even though so many of Fed's presidents, local governors, etc., are speaking, this is the Fed chair. That is later today. Rima, hi.
Hi, and last hour moves, the last 10 minutes moves, seen in names like Tata Motors, so pull that up for you. Axis Bank, HUL has been a big mover this entire week. This week, in the first 3 days, it's seen a rally of close to about 4.5%. Ultratech Cement has spiked up as we speak. So all in all, we are currently up 70 points at a fresh record high on the Nifty. And things are picking up quite rapidly. This would be the 7th consecutive day that the markets, Nigel, are currently holding up in the green. We consolidated for the last 2 trading sessions, and now it looks like the markets are trying to inch higher.
Well, that's right. Good afternoon, guys. So, the sense that you're getting is the Nifty is in this 180 to around 200-point band, and that's for the expiry that's tomorrow. So tomorrow is the weekly expiry that takes place, and 18,550 to around 18,730. That appears to be the broad range. And I say this because I'm looking at a couple of strikes that are very active. 18,600 put, well, that's fairly active. So keep an eye out on that. The premium's around 25 rupees. So at the start of trade, it was around 50 rupees. So there is some signs of writing out there. That's where 18,550 will serve as a bit of a support. On the upside, though, I still think that there'll be a bigger, effort that will be needed to get past this 18,730 odd. Because the 18,700 call, it's seeing a huge amount of open interest build up. The premium out there is around 35 rupees odd. So just keep an eye out on that strike. If we can get past that level, then maybe we'll be making a swift move towards that 18,900. But it appears there is a bit of a fight out there. However, we're just looking at the headline index. But I think what's encouraging today is that yet again we are seeing better participation from the mid-cap index. So let's see how the last 60 minutes goes. But the number of stocks that are advancing are more than the number of stocks that are declining. And the mid-cap index is doing a relative outperformance as we speak. So final 60 minutes crucial. Then we'll hear from the Fed chair, and tomorrow we have weekly expiry as well, Rima.
And this is what we've lined up for our viewers for the final 60 minutes of trade. The Kirit Parikh panel bats for liberalization of gas sector by 2027. Until then, a reduction in the price with annual escalation for gas from existing fields. Key excerpts from our exclusive conversation coming up. Also, we'll analyze how individual stocks get impacted by these recommendations. We also learned from sources that Max Financial's promoter Analjit Singh is exploring options for a stake sale in the company. This is an exclusive, and the details coming up on Closing Bell today. And Gland Pharma has entered into an agreement to acquire CDMO player Sensex Group for $120 million. The stock has tumbled close to about 5% in trade. More details on the reasons why. And finally, we'll talk all things market with Dinshaw Irani of Helios Capital India.
All right, so that's an interesting lineup here. How should you position yourself in the last hour of trade? Mitesh Thakkar is with us to tell us exactly that. Mitesh, good to have you with us here. Thank you very much.
Margin compression and inflation compression that can happen. So I think looking forward, this looks really good. The Q2 results themselves have been, more better than I expected, and although there is some margin compression in certain sectors.
Okay, very comprehensive. Thank you very much for that. Stay on. We need to slip into a very short break. We'll continue our conversation on markets. We'll also invite Dinshaw Irani of Helios Capital India. Welcome back. Mid-caps are outperforming. M&M Financial has made a big move in the last few minutes. Zomato is at the high point of the day. That's a rally of close to about 2%. Birla Soft in the IT pack too is seeing very good volumes. The stock has gained close to about 3%. On the losing side, Bikaji, which has had a one-way run since its listing. The listing issue price was 300 rupees. The stock was virtually at 450 yesterday. But today, Bikaji has come in for some amount of pressure in the last 30 minutes. The stock has slipped close to about 4.5%. And Gland Pharma is the other one, which is under pressure. I think it's down close to about 5%. There was a big acquisition of that European company, Sensex, for close to 120 million euros. Ekta is here to tell us more details and why is the stock sulking. Ekta?
Thanks for that. Well, yes, the news with regards to Gland Pharma, which came out post-markets yesterday, is that they've entered into a put option agreement to acquire 100% of this European company, Sensex Group, for 120 million euros. The maximum consideration which is payable with regards to this particular acquisition is around 210 million euros, which is basically in addition of debt. Now, one of the key concerns is the margins, which have been quite volatile and lower than what Gland has been reporting. So the margins in CY21 was around 13%. It rose to 19% for Sensex in the first half of CY22. Now, we did speak to the management and a couple of key important takeaways is that, yes, there could be some dilution in terms of margins in the near term, but overall Sensex is moving to a higher margin business and hence margins could probably improve in the longer term. When it comes to the base business of the company, which has been challenged for the past couple of quarters, they said they are in wait and watch mode because they were not in a position to give FY23 guidance in Q2, and they maintain that as of now they will not be giving FY23 guidance. They need time to get over the near-term challenges. Separately, no communication from Fosun Pharma on any stake sale, investment, M&A, any kind of decisions with regards to the business continues as per normal. A couple of brokerages wrote on Gland. Morgan Stanley has an overweight with a target price of 2558. They say that growth should resume in FY24. Citi has a sell target price of 1920. According to them, they are yet to figure out how the two businesses, which is Sensex and Gland, will complement each other and generate synergies going forward.
Okay, all right. Thanks a lot for that, Ekta. Well, Deepak, what do you think of Gland? Yesterday it was in the news because there was an overhang that maybe, in fact, the parent could look at selling out. You could look at it positively or negatively, depending on the appetite. But later in the day, they went ahead and they made that acquisition that Ekta just told us about. Valuation-wise, not very expensive, at around 1.1 times EV upon sales. However, the street has taken note, I think, of the margin dilution. What's your sense?
I mean, I think margins had come down. In fact, 2 quarters ago, we owned the stock and we'd been since out of it. I think there's going to be an overhang of the promoter selling at some point. Now, Fosun is not necessarily in trouble. I mean, they're not looking to actually immediately sell anything on Gland yet, but they have made statements that they will need to sell assets in order to raise some cash because of their other cash requirements and debt that is at the parent level. So I think that will result at some point in them, kind of selling shares or selling stock. Of course, Gland has denied it yesterday. I think the positive news would have been if the parent had actually sold, and then it would be a perfectly valid business. There's also the that creates another loop, because once you have Chinese ownership, given the situation in India, I think there are a little bit of unknowns which we have to factor in, saying that we don't know whether tomorrow there will be restrictions on operations if the parent is Chinese. So that creates another non-fundamental based, completely external kind of pressure on the stock. So otherwise the business is decent. I haven't seen the latest acquisition in any detail, but if there isn't, I mean, if it's financed properly, this might actually help them in the longer term. Though I think margins will compress even further for at least a quarter or so, maybe till the March quarter, and we'll take a call at that time. We've decided to wait until the promoter issues are sorted out.
Okay. Deepak, thank you very much for those insights. Appreciate you joining in with that here on CNBC-TV18. By the way, that 230, the surge which started at 230 is all but gone. I mean, all of it. We started at 220 at 18,670, went up about 30 points. The high is 18,701 or so. And we are almost practically back at those 230 kind of levels once again. Now, there is another large deal brewing, and this time it seems to be in Max Financial Services, which owns Max Life Insurance. Nisha is standing by with what she's picking up on this exclusive. Nisha, over to you.
That's right. At least 4 independent sources with direct knowledge of the developments at Max Financial Services have shared with us that the promoter, Analyst Singh, is looking to sell stake in the company. And remember that Analyst Singh, being the promoter of the company, owns 14.72% stake. And we do gather from sources with direct knowledge that there is an investment bank hired to carry on this stake sale process and is in talks with various strategic players as well as the private equity players. Now here we do gather that the ask price for the valuation at which stake sale should happen, the ask price from the seller's side is close to about 27,000 crore rupees for Max Financial Services. And we reached out to the company and the promoters for their comment on this information, and they have categorically denied this development, and they state that this is untrue and Analyst Singh remains engaged and invested in the company. So this point must be noted. Another important point is that for Max Financial Services, the key asset, underlying asset, because of which it becomes an attractive proposition for the buyers, is the Axis Bank's minority stake in Max Life Insurance, and also that Axis Bank is the co-promoter there. So that will add value and will play a critical role there in this particular deal process. Another important aspect is that if there is a substantial stake sale by Analyst Singh, say close to his entire holding of 14.72%, in that case it could trigger an open offer with this particular transaction, since it will mean a change of control because the seller is a promoter.
Interesting, Nisha. Thank you very much for that. We'll keep track of that story. It's again a huge underperformer in an underperforming sector. It is perhaps a big laggard even in there. By the way, the market is, it's not as if, as I said, it's given up most of those gains which it had accumulated in the last 30 minutes, but we'll see. 18,679, 18,680 or so is where the Nifty is at. Dinshaw Irani is joining us now. He's Chief Investment Officer at Helios Capital India. Dinshaw, pleasure. Great to have you with us here on CNBC. Appreciate it. Slow and steady, but steady the market is. Accumulating gains, 40, 50 points every day. There is a fair bit of rotation. Some constants like Reliance over the last couple of days. How are you feeling about near-term prospects then, Shaw? New all-time highs, by the way.
Thank you, Prashant, for having me on your show. And frankly, I mean, our call has been that probably from here on, the markets should be taking a breather because as we've been pointing it out, and you guys also have been pointing out regularly, that we've probably been the best performing market in the world, forget the region, in dollar terms, though we've down some 10-11% dollar terms. Of the fact is that other markets are down 25-30% odd as such, and the outperformance has been purely because of the fact that we've managed the inflation very well, and the other markets have had their own set of problems, like a China, its own set, or a Korea or a Taiwan, and these markets are having their own sets of problems. And India, frankly, hasn't had a problem at all. And in fact, if anything, the quarterly numbers that came out recently, the headline numbers weren't that exciting. But if you dig a bit deeper and remove the energy companies and probably some commodity companies, the growth has been phenomenal in their mid-20s as such, the earnings growth. So that has helped the market prop up, but that's as much as you can swim against the tide. Ultimately, you'll tire out, and that's what's happening. I mean, the flows are pretty okay till now, but the fact is that ultimately people will stand up and say India has done very well, and it might as well wait on that country rather than moving in quickly. So our feel is that for India to further rally from here, you will need to see the other markets stabilizing, and that doesn't look like happening in the next couple of quarters. So that's why we believe it's going to be a breather, maybe a flatlining from here on.
All right. Afternoon, Dinshaw. Thanks so much for speaking to us here on CNBC-TV18. Well, the globe clearly is in a bit of a tizzy. And you're saying that you rather stick to the domestic themes rather than go overseas or go to the global exposing companies. One such sector will be the IT space. I recall somewhere in the middle of 2022, you all had some exposure to one mid-cap stock, which is now a larger cap because the entities have merged. That's L&T Mindtree. You all are totally out of IT now? No exposure whatsoever?
So it's zero, Nigel. We are totally out of IT, and our feel is that since we've seen the sector for a very long time, our feel is that the managements call out what they see immediately. But if you look at the factors that were reported during the recent quarter, already the commentaries are becoming cautious, right? I mean, they're already pointing out certain industries where there's caution creeping in, discretionary spends are going away. But even if you look at the various parameters that you normally track in an IT company, the utilization ratios are moving up. They're trying to utilize more and more of their bench. The bench is getting compressed. The bigger deals are getting prolonged. I mean, there's no closure happening on those deals. Then obviously subcontract costs are coming off. They're looking at more and more in-house and cutting off that. So that's another area that is a highlight here. Price negotiations are not going through. So it's obvious that there is some amount of slowdown that they're also looking at in the future. I think the call out will more or less be with the December quarter, because that's when the visibility for the next year will come through. So till now, they've been executing the contracts that were there already in their books. But even though the discretionary spends are going away, I think the call out will be in the middle, at the end of this December quarter, once they come out with their numbers, probably by the middle of Jan. I think that's when you'll see some kind of a reaction in the IT stocks, mainly because they're already at some 35-40% premiums to their pre-COVID levels, and we don't expect the growth rates to be more or less different. I mean, slightly more higher than the pre-COVID levels, nothing beyond that.
Dinshaw, afternoon. So if the markets are likely to consolidate, pause from here on, would you recommend, or are you trying to do any tactical reallocation of the portfolio, any ins, any outs that you would recommend to make that extra money?
So, okay, the out was mainly the extra, as Nigel pointed out, the external facing sectors is where we moved out. I mean, the export-oriented companies and all, because we don't expect the global markets to stabilize in a while. But if you're looking at the domestic consumption stories, here again, we are fairly cautious. We are basically looking at any correction to get into the company per se. In fact, if you rebalance, I mean, we've done some rebalancing of the portfolio. We already have some 4.5% of cash with us as of today. But the fact is that we're not in a rush to deploy that cash. That itself shows that how cautious we are going forward. So that very, and in fact, one more thing that we've done is if any new client comes in today, we tell him to stagger his inflows to us. In fact, we try to stagger it out over 4-5 months as such so that we can average out the flows per se. But one more thing, whenever the market flatlines, it gives immense opportunities for stock pickers to come and pick their stocks, study them well, and then build up their positions. I think that's what's helping us out in a way.
By the way, the market's made a new high. I mean, what the last 40 minutes it has been. First a 30-40 point surge, then a 30-40 point sell-off, and now there is a fresh round of buying which is coming through in specific names. I'll tell you which ones. But where it's 18,728, which means we are up 110 points now. That is the surge. Pretty much all of the moves have happened. Incremental moves have happened at starting about 225 or so. And this is the latest one which is coming through. Let's have Reliance Industries, the intraday. That is seen a surge. I think on the intraday you'll be able to see that. That one has come up and helped the market last few sessions in the last hour. HUL, like yesterday, I mean, FMCG was the top performing sector. HUL is also pulled up a little bit. And then the HDFC Twins, sharp move on HUL. There you go. HUL is adding about 12 index points to the Nifty. And then HDFC and HDFC Bank, between them, another 20 points on the Nifty right now. So that's the bulk of the move that we're seeing. Actually, let's have a look at ICICI Bank as well. That is a big surge on ICICI Bank. You know, from 945 kind of levels to about 953, and I'm talking about last 4-5 minutes or so on ICICI Bank as well. So 116 points now. So this is coming in very nicely. Dinshaw, you know, you own names like Campus Footwear, which after results has corrected. Are you accumulating more? Has the thesis changed, or this is just temporary in your opinion?
So it's just temporary in our opinion, frankly, Prashant, because the fact is that it was the raw materials which created havoc, and obviously in one quarter with this kind of a surge in the raw material prices, they could pass on to their end consumers. But the price points are pretty sticky price points, so that's why it shouldn't be a problem for them to do that going forward. And you'll already see, probably this quarter again, you may see some kind of a slight uncertainty. Maybe the margin will maintain. But the fact is, going forward, this will definitely be passed on. So we look at such opportunities to build up our positions. Also, as I said, that flatlining is what helps us in a way, and that's what we've been doing in not only in Campus but other stocks also, where there may have been some correction.
Dinshaw, pleasure speaking with you. Thank you very much for joining in. We've got to shift our attention to another exclusive story. After recent fires in electric vehicles, the Department of Heavy Industries has slowed down disbursements to EV manufacturers and even put subsidies on hold in some cases. This is in response to the high number of complaints regarding the violation of localization criteria and quality norms. The government is also mulling asking certain EV players to return the subsidy claimed. Parikshit joins us for more details on this story. Parikshit?
Well, yes, the government is stepping up audits on all EV manufacturers in the country. So ICAT, ARAI are visiting facilities of different EV makers which are claiming FAME subsidy, and they are checking their entire supply chain data, they're checking their localization data, testing criteria, quality control norms on the shop floor as well. This is one of the reasons why the disbursement of FAME subsidies has also slowed down. Many EV makers have been complaining about the slow pace of disbursements, and the government is now telling us that this is because there has been an exponential rise in EV sales over last year, and there needs to be greater scrutiny and check on who's meeting the localization and quality criteria and who's not. In some cases, the FAME subsidy has been stopped and put on hold. This is in the case of companies like Okinawa, also Hero Electric. We're also getting to know about more companies such as Ampere, Tukral Electric, Victory Electric Vehicles, and there are others as well. So wherever the government is getting complaints from whistleblowers or there is some discrepancy in the data submitted, the government is putting the subsidy on hold temporarily and later releasing it once all the doubts are cleared. We believe that till now, subsidies to the tune of 500 to 600 crores have been put on hold and continue to be put on hold as well. We are learning from top-level sources in the government that certain EV makers which have made serious violations of localization criteria may even be asked to return the subsidy that they have claimed in the last 2 years. This final decision will be taken by the government, and the recommendation on this front is lying with the Minister for Heavy Industries.
Okay, all right. Thanks a lot for that, Parikshit. By the way, the market is going for a bit of a breakout now. You know, since we have been trading above this 18,700 odd mark for most of the last 20 minutes or so, and now we've put on a quick 50 points. It appears, you know, the street is going into this event this evening in terms of the Fed Chair Powell's speech. They're expecting some dovish commentary. And that's why, in fact, we've seen a big surge, particularly in the last 30 to around 40 minutes or so. We'll slip into a short break. On the other side, Nimesh will be joining and he'll give us an insight into dealing room chatter. We'll also be joined by our technical experts. Don't want to miss this. Welcome back. The markets are surging higher, but just one stock. You know, keep an eye on Shriram Transport. There's a big move that we're seeing in the cash market. In the cash market, it's up close to around 7%, while in the futures market, it's up just around 2.5% to around 3% odd. So there's big cash market move is what we're seeing out there. And that rate difference between the cash as well as the futures, that's widened big time as well. So just keep an eye out on that front. But for the time being, let's shift focus to D-Street chatter. Well, Nimesh is joining in. Nimesh, you know, we're waiting for what Fed Chair Powell has to say. I don't know whether he's going to sound dovish, but the way the Indian markets are going, it's looking like, you know, they are saying maybe Powell will say go buy India or something like that on a lighter note.
I don't think, you know, markets are caring about what US is going to do. Of late, you're seeing this, you know, big outperformance of Indian markets and big divergence. So that's clearly playing out for Indian markets. So a sharp recovery from the intraday lows in today's trade. And the good part about today is that there is participation from many sectors. So autos, cement, you know, IT to some extent, all are participating in today's move. So that's a good sign. In terms of flows, it will be largely driven by MSCI rebalancing. So, you know, the brokerage is expecting $500 million plus of net buy flows because of the MSCI rebalance. So the FI number may look large in today's trade. So that's something to watch out for. But I guess the most interesting feedback today is that, Nigel, you know, while the mid-cap index is up 1%, but there are a lot of bids being offered in the broader markets from larger institutions. So looks like this rally in the mid-cap and small-cap to some extent has been used by the institutional investors to book profit. So that's a bit of a, you know, indication from the larger dealing rooms. I guess we spoke about a couple of sectors, but the sector to watch could be the auto sector. We'll see the monthly sales data from most of the companies starting tomorrow. So that's going to have an impact on many of the individual stocks. But I guess that's a sector where there is a bit of buying back as well. So that's a sector to watch. But broadly, looks like the bulls are in full control of Indian markets, and that's where you're seeing, you know, intraday, everyday intraday dips are getting bought. But I guess for today, the FI number may look large, as I said, but that's largely because of the MSCI rebalancing.
Well, and the auto space, Nimesh, Eicher Motors, Mahindra & Mahindra, last 15 minutes or so, there's a big spike that we're seeing on a couple of these names. Right. But what are the other stocks that you're tracking? What's the news you're picking up?
Okay, so the first stock in my list today is Maruti within the autos name. And you know, that stock has also recovered from the intraday lows, but the overall feedback is there was a selling pressure from a leading FI. That seems to be largely getting over, and hence that stock should be in focus. So that's the first stock on my list. The second stock is Fusion Microfinance. Again, a small stock, just got listed. We had the management as well yesterday on the channel. The numbers were quite strong, but the stock has been consolidating off late. And one of the reasons is there is a leading FI who is a big seller in the stock, and hence you're seeing that some bit of pressure in Fusion Finance. Still some stake is left, so that's the overall feedback on Fusion. The third stock is GTI AMC. That stock is buzzing off late. In fact, this week itself, the stock is up 10%. Yes. We saw the news break where PNB is looking to sell their stake 17% in UTI AMC. Now there is an anticipation in the market that maybe a strategic investor may look to buy, and hence, you know, that stock is now back in the radar for many institutional investors. So that's UTI AMC. And the last stock is United Spirits. I guess market has taken a cue from you, Nigel. You know, 38th salary getting credited, you know, getting into Christmas mood. You're going to spend more. So, and I think United Spirits is largely back in focus. There is some bit of buying as well. But I was also reading an interesting report that, you know, within the FMCG names, you're going to see a bit of outperformance in the month of December from the spirit company. So that's why you're seeing a bit of preemptive buying in United Spirits as well today.
All right, cheers to that then, guys. Back to you all in the studio.
Well, it looks like that MSCI rebalancing inflows are coming through, right? Because right at 3 o'clock, you've started seeing that buying, and as Nimesh just put out that figure, $530 million of net inflows estimated. We thought a lot of it would have happened, right? Slowly, steadily.
It usually does, Rima.
It really does.
Yeah. I mean, there is, the anticipation of what will be included, then the actual names come through, and then there is an effective date. So in the past, we've seen a lot of that gets front run. And by the time this inclusion happened, the impact is not that large. But this is different. And this clearly seems to be, very, very, very committed kind of buying which is coming through. It's showing up on the Nifty in a big way. So 154 points now at about 18,772 is where the Nifty is at. Almost 75 points coming through in the last 18 minutes or so of trade. Mitesh Thakkar is with us. Mitesh, I mean, from the last time we spoke, another 70 points. So this is going big time. Your sense, Mitesh?
In fact, 18,750 was sliced very easily, and I was actually surprised a bit. But then again, in fresh eyes, where there's no historical supply pivot, I think these kind of things have been observed. And in that sense, I think, just as I said, I think, just trail your stop losses. Now, I think the level is closer to about 18,600. And as long as that doesn't get taken out, stay long. And on the stock side, I have a BTST on Tata Motors that I would recommend. It's closing above the 200 average today. So that's a BTST with a stop at about 435 and a target of around 447 for tomorrow. And Tata Steel as well. That's a BTST with a stop at about levels of 106.5 and a target of around 109.5, 110 for tomorrow.
Quickly tell you some stocks which were expected to get inflows on account of the MSCI rebalancing. One of them is Varun Beverages, and that stock has gained close to about 9.5%. IFL research shows that the estimated inflows were to the tune of $187 million. And look at the up move that you can see in Varun Beverages, clearly a beneficiary of the MSCI rebalance. Another one where money was anticipated is Bajaj Holdings, where for Bajaj Holdings, I think $132 million was the anticipated inflow. Bajaj Holdings has seen a bit of a move up. Tube Investments, Indian Hotels, ABB India and TVS Motors. These are a couple of the stocks where the MSCI rebalancing would have resulted in a weight increase and inflows, and you can see the up move and buying coming through in all these names. Bajaj Holding, Tube Investments, Indian Hotels, ABB, TVS Motors and Varun Beverages. In all of them, there is a weight increase, barring Tube Investment, which is a new addition. But that's about the MSCI rebalancing, which is effective from the close of today, and we are seeing some buying coming through on account of that. But the big cue tomorrow is going to be the auto sales numbers for the month of November. Mangalam is here to tell us the expectations. Mangalam.
Well, thanks a lot for that. The November wholesale sales are likely to be relatively strong, and this despite the weakness in the entry-level segment. And the reason for that is the strong demand that continues in the premium and high-end segment. As far as the SUVs are concerned, the wait periods have reduced, so that would aid growth this time around as well. We've seen some moderation in trucks and tractors, which perhaps may be seasonal, post-festive, etc. But let's see how that pans out. And two-wheelers, while the retail sales have been reasonable, the wholesale sales have been impacted, and that's largely on account of destocking by dealers. Urban still continues to outpace rural, and that is something we'll be watching out for going forward as well, not just for the auto sales, but the entire consumption basket. In terms of numbers, for Maruti, we're expecting a 21% jump in sales, 1.68 lakh units, a lot of them being led by some of the new models for the company as well. Tata Motors expected a 19% growth out there with nearly 74,000 units, and these are numbers which have been collated by a bunch of analysts, so it's a CNBC-TV18 poll that we're talking about. For Ashok Leyland, we expect a 30% sales jump, just about that 13,500 units. And for M&M, they're likely to be the best of the lot. Auto sales up 44%, and that's largely on account of some stellar launches that the company has made. Tractor sales, however, likely to be muted, just about 1% growth out there. For Bajaj Auto, we are expecting a 10% downtick in sales, and that's primarily on account of weakness in exports. And Eicher Motors, TVS Motors, Hero Moto, all of them likely to see growth anywhere in double digits. For Eicher Motors, of course, it will be much higher, 43% jump out there.
Thank you very much for that. Hemang Jani of Motilal Oswal Financial Services is with us. Hemang, numbers will be out tomorrow, but anything in the auto space where you would recommend a buy, where you are seeing a price valuation mismatch and therefore attractive?
Yeah, Rima, good afternoon. So I think having seen a bit of a cool off in the auto stocks, I think apart from monthly numbers, the fact that the overall commentary from the management post festive season is actually very encouraging, both across two-wheelers, passenger vehicles, and to some extent CV side also. So I think within the pack, we expect good, strong numbers come through from Ashok Leyland, Maruti, and we also think that tractors versus the expectations of a muted growth, you might see some positive surprise. So overall, we think that it makes sense to go with the momentum now that we've seen a very strong traction building up through the festive season. So we continue to have a positive bias.
All right. Hi, Hemang. Good afternoon. One stock that's surging in the last 1 hour or so is Shriram Transport, actually. The stock is now up close to 8%, and there's a big difference in the cash and the futures market. What's your sense on this one? It appears there is genuine cash market buying for now. Any view on it?
I think, Nigel, what we are seeing is that versus the movement in the auto stock, some of the auto financials had actually underperformed big time. And basis the incremental data points and the management commentary, people are getting a slightly more positive on the names like Shriram Transport and to some extent Chola also. But our take is that it makes more sense to go with the banks rather than the NBFCs at this point, because you don't really know how long the interest rate cycle will remain higher. And so we would definitely go with the banks versus the auto financials.
I think with Shriram, we'll just have to confirm this, but it is today, I think, is the record date for the merger of Shriram Transport and Shriram City Union. I think so, but we'll have to confirm. 30th of November, from what I remember, is that perhaps the reason why we're seeing a surge like this? But it's a big one, 6%, almost all of it coming through in the last 30 minutes or so of trade. But, I have to say, the broader market has also picked up a lot. There are so many names. Look at Varun Beverages, huge move. I mean, 14% higher on Varun Beverages. Massive, The stock was at 3 o'clock, was at 1175. It basically is at 1300. It's at what? 1323 or so right now. So that's a very large move. It's up 14%, Varun Beverages. But look at Bajaj Holdings. That is a big surge. That stock is up 8%. Again, almost all of that surge coming in after 3 p.m. Adani Transmission is another one which is up about 6% or so. Although, I mean, that's not a complete 3 p.m. move in that sense. Adani Green is another one. This one is a complete post 3 p.m. move from 2023 to where it is now, which is 2140 or so. That's a large one. Shriram Transport we already spoke about. Lemon Tree has been higher, but it's basically doubled gains. Mid-afternoon was up 4-5%. It's up almost 9-10%. And so many other names I could go on. And volumes have also picked up in the broader market in that sense. We'll take a break here. There's 5 minutes to go for close. Hemang is with us. See you on the other side.
Welcome back. 1.5% rally on the mid-cap index, and hotel stocks are rallying. Lemon Tree is up 9.5%. Taj GVK up 10%. Indian Hotels too has seen some buying. Hemang, this is the time. This is the period when hotel occupancies rise. They also opportunistically raise the room rent. Tactically, would you recommend a buy on any of the hotel names?
So Rima, I think, this Indian Hotels is because of the MSCI inclusion and the flows of 216 million, which is why we are seeing a strong traction. Apart from that, what we feel is that for Indian Hotels and Lemon Tree, both the overall outlook continues to be good. More so this particular quarter where you see wedding season, being at its peak. Also the tourist season in NRIs typically come here. So I think that would bode well for the names like Indian Hotels and Lemon Tree. Both are under coverage, and we have a buy rating, and we think that there is a case for a significant upside from current price point also.
Okay, Hemang had a few other questions, but we are at the end of the market hours today. So appreciate you joining in. Good speaking with you as always. 166 points, and the last 30 minutes has turned out to be pretty monumental in that sense, because almost all, not all, but 50% of the 160 points came, more than 50% came in the last 30 minutes of trade. So this is quite something. that we've seen today. 18,776 is where the market's going to finally leave at. Banks were kind of underperforming, but there was a strong push higher there as well. Nifty Bank actually ends up by over 0.5%. Mid-cap index ends 1.6 higher. The small-cap index ends higher. So nothing really to complain about in terms of the price action. The largest gainers in terms of trade are in M&M, which is up 4%. Hindalco saw a 3% gain. Grasim, SBI Life, and Ultratech in the 2% category. At least 10 names on the Nifty with gains of more than 2%. Rima, but a lot of action as we were highlighting in broader markets as well.
Absolutely. Varun Beverages, Lemon Tree, Equitas, SFB, JSPL, Zomato, despite the block deal, Zomato ending with a gain of close to about 3.5%. Across the board, you've seen some very large moves in mid-caps. The advanced decline ratio positive, close to about 2 stocks in the green for 1 in the red. On the losing side, Railway PSUs, IRFC and RVNL came in for some amount of profit booking. Ircon2 lower by 2.5%. And a couple of these banking names, UCO Bank, PNB, Canara Bank, Bank of India, Central Bank, after phenomenal run-up that we saw earlier this month, some amount of profit booking is visible. All in all, this has turned out to be an exceptionally strong session for our markets, up for the 7th day in a row. The Nifty ends at that 18,718 mark. A surprise up move coming through in the last 1 hour of trade. 160 points higher on the Nifty. Sensex up nearly 600 points. The MSCI rebalancing inflows may have contributed to the up move, and mid-caps have outperformed handsomely, with the mid-cap index gaining with a rally of 1.3%. With that, it's a wrap and closing bell. On the other side, our special show, Indianomics, comes up next.